$400 million in tokenized real-world assets. That is the exact number that the XRP Ledger just hit. And the part that should make you sit up and pay attention is how fast it happened. It took exactly 15 months for the XRP Ledger to cross this line. Now, to put that into perspective, Ethereum required 36 months to pull off that exact same achievement. Now let's think about that gap. While the broader market was distracted by loud narratives, meme coins, and regulatory theater, something fundamentally massive just shifted beneath our feet. XRP did the impossible twice as fast as the reigning king of smart contracts. We are watching real-world assets, from institutional funds to debt instruments, migrate to the blockchain. And the speed of this migration is breaking every historical record that we have. Now, you have probably been told for years that the XRP Ledger is a ghost town, a relic of an older era of crypto designed solely for cross-border banking settlements that never quite materialized the way people had hoped. You have been told developers only care about Ethereum or its copycats. But the numbers coming out right now tell an entirely different story. This isn't about hype or retail speculation. This is about institutional velocity. And when you take a look at how fast capital is actually moving into these networks, XRP is suddenly outpacing Avalanche, outrunning Polygon, and leaving other enterprise networks like Algorand completely in the dust. But the question we have to answer today isn't just how this happened. The real mystery is why it is happening right now in the middle of 2026, and what these specific 15 months reveal about where the massive multi-trillion-dollar industrial tide is actually flowing. If you think this is just a random spike in volume, you're missing the blueprint for the next financial system. To understand the scale of what has just occurred, we need to look very closely at the timeline. In January 2025, the total value of tokenized real-world assets sitting on the XRP Ledger was just $10 million. It was barely a blip on the radar. Ethereum was already sitting on billions, commanding the vast majority of the tokenized asset market. If you looked at the scoreboard back then, the race seemed completely over. But then something shifted. By April 2026, that $10 million had exploded into $400 million. That's a massive growth surge in a very short time. It took XRP just under 15 months to complete a journey that took Ethereum nearly 4 years. And here's why that milestone matters so much. Growing from $10 million to $400 million is actually the hardest phase for any blockchain network. It's the phase where a network has to prove it isn't just hosting experimental test projects. It's where real corporations, asset managers, and financial institutions start trusting the infrastructure with actual capital. Ethereum had to pave that road from scratch, which explains why it took so long. But when alternative networks tried to follow the same path, many of them stumbled. Avalanche and Polygon are highly capable networks, yet XRP beat them to this milestone faster. That tells us something critical. The infrastructure of the XRP Ledger was uniquely built for this exact purpose from day one. It didn't need years to convince enterprise users how to issue tokens. The system was already designed for it. The institutional money didn't have to fight the system to get in. It just flowed in because the doors were already open. Now, this raises a serious question. Do you believe Ethereum's massive head start is permanently secure? Or are these speed metrics proof that liquidity will eventually migrate to faster, cheaper networks like XRP? When you look back at the history of smart contracts, Ethereum became the default simply because it was first. But being first comes with a cost. Its architecture is complex, expensive, and often unpredictable in fees. The XRP Ledger took a completely different path. It focused purely on the movement of value. Instead of relying on complex smart contracts, it built token issuance directly into the base layer. This structural difference is the hidden engine behind everything you're seeing right now. On Ethereum, launching a tokenized asset requires writing and deploying a smart contract. Every interaction costs gas, and those costs can spike unpredictably. For institutions managing millions or billions, that unpredictability is a deal breaker. On the XRP Ledger, token creation is built-in, secure, and costs a fraction of a penny every time. That's not just a small advantage. That's a fundamental shift. When institutions realized they could bypass complexity and risk entirely, the choice became obvious. They didn't need experimental flexibility. They needed reliability. And this structural advantage stayed hidden for years while retail investors chased trends. But the moment serious capital entered the market, the difference became impossible to ignore. Now let's zoom out even further. The traditional financial world is facing a massive problem. Trillions of dollars are locked in illiquid assets like real estate, private equity, and debt. These assets take days, weeks, even months to settle. Tokenization promises to fix that by turning them into digital assets that can trade instantly. But here's the catch most people miss. Tokenization is useless without liquidity. You can tokenize a skyscraper, but if no one can buy or sell it instantly, nothing has really changed. This is where XRP's built-in exchange becomes critical. Every asset issued on the ledger can immediately access liquidity without relying on external platforms. That means institutions aren't just getting digital tokens. They're getting an instant marketplace. No third-party risk, no fragile DeFi systems, no complex integrations, just a closed-loop system where assets can move, settle, and trade seamlessly. Now you start to see why growth exploded so fast. Institutions weren't experimenting anymore. They found a system that actually works. While this was happening, the rest of the enterprise blockchain space went through a major shakeup. Networks that once led the race started losing capital. Funds didn't just disappear, they moved. They moved towards stability, reliability, and proven infrastructure. And that's where XRP stood out. It has been running for over a decade without major outages. When institutions had to choose where to park serious capital, they chose the system that had already proven itself. Not the flashiest, not the newest, the most reliable. And that decision changed everything. Now let's be clear about one thing. Ethereum is still the giant in this space, with billions in tokenized assets. The gap is still huge, but the trajectory is what matters. Ethereum built its dominance in a time when there were no real alternatives. Now the landscape is changing. Institutions are no longer experimenting. They are optimizing. They want lower costs, faster settlement, and scalable infrastructure. And when you look at networks growing this fast, you are looking at a compounding trend. This isn't short-term hype. This is long-term infrastructure being built. If a bank can settle a transaction in seconds for almost nothing, why would it choose a slower, more expensive system? The logic is simple. Capital always moves toward efficiency. And what we are witnessing right now is the beginning of that migration. This 15-month sprint wasn't the finish line. It was the signal. The signal that the institutional pipeline has shifted into high gear. We are no longer in the era of speculation. We are entering the era of utility. The $400 million milestone is more than a number. It's proof that when the infrastructure is right, capital flows faster than anyone expects. And here's the final twist. This isn't even the main event. This is just the opening chapter of a multi-trillion-dollar transformation. The assets that define the global economy are starting to move on-chain. The infrastructure is live. The capital is moving. And the blueprint for the future of finance is already being executed. So the real question is, are you watching this shift happen? Or are you going to realize it after it's already too late? If you want to stay ahead of these hidden moves, make sure you subscribe now, because what's coming next might not stay under the radar for long.